Hello and welcome to the weekly roundup for the week ending Friday the 18th of December. We hope that you're enjoying these reports and please don't forget to subscribe to receive regular stock market content. Also, if you've got any questions, pop them in the blocks below. As always, we would love to hear from you. And finally, we invite you to follow our free stock market sector reports on such as banking stocks, tech stocks, IPO, using the link in the descriptions below. So this week, risk sentiment has pushed on higher, taking stocks with it. And this has basically been on the back of vaccine optimism after the US approved the Pfizer COVID vaccine and has started its vaccination program. Also, hopes surrounding US stimulus has lifted the mood in the markets, as well as progress, it would appear, on Brexit. So the FTSE is actually looking to finish the week around 0.4% higher. The DAX has had a significantly better week, looking to end around over 4% higher, whilst the S&P is looking to end the week just around 1.8% higher. Now, the reason that the FTSE is once again underperforming its European peers is because of the strength in the pound. The pound has rallied over 2% again this week, after the Brexit appears to be moving towards a deal. Well, it was until today. So Brexit optimism, as they sort of resolve problems surrounding the fair playing field, really pushed sterling higher. Today we've had concerns from Boris Johnson that actually a no trade deal Brexit could actually be more likely again, and this is because of the problems over fishing, which the two sides really seem to still be at loggerheads over. Now, talks are set to go into the weekend. There's been another soft deadline set for Sunday, but as we've seen previously, these deadlines, they do seem to come and go. So the pound US dollar is actually trading just slightly off today. It's hanging around this 135.20 level, which is actually a really significant level because that's the high from 2019. So if it does actually manage to close the week above that level, that would be offering a good base for the bulls to head higher. However, a close below that sort of 135.20 level would suggest that perhaps there's a bit more weakness to come in the price. The Euro's also had a very good week. It's rallied up around 1% across the US dollar. This again is actually mainly down to US dollar weakness. Now, the US dollar index has been trading down at a 2.5-year low on sort of vaccine optimism, hopes, again, as I said, that Congress will agree to some additional fiscal stimulus. Over in the US, eyes will very much be on Capitol Hill. They are hoping that an agreement will be reached today between the Democrats and the Republicans. We've also had central banks this week, although they very much played second fiddle to what's going on in Brexit and in Congress. The Bank of England and the Fed, they didn't move on rates, didn't touch bond buying programs. So that's very much steady as you go. I think especially with the Bank of England, they'll be looking to see what happens with Brexit and as far as COVID lockdown restrictions are concerned as we head into January and Q1. As far as single stocks are concerned, we've had some big movers. Builders have been very much in focus this week after Rightmove reported that house prices increased 6.6% year on year in December. Now, not only that, Rightmove also suggested that they expect that the mini housing boom here in the UK will continue into 2021, with house prices expected to increase 4% next year. Now, this is much more optimistic than perhaps what we were expecting. On the back of that, Taylor Wimpey has surged 8.6% across the week. Another strong performer this week has been Dixons Carphone. Now, they rallied 12% on Wednesday and they've surged 25% across the week after reporting a return to profit. They reported a £45 million profit, and that was in the first half. That's up from an £86 million loss in the previous year. Now what they've seen is a 17% rise in like-for-like sales, and what's really interesting is this has happened despite the lockdown periods. Their online sales have absolutely surged, particularly in the electricals department, of people who've been in home and sort of looking at ways to improve their home or electric domestics. So they've had an absolute stonking week as well. Other stock to keep an eye on this week is Tesla. Now, I do talk about Tesla famously quite a lot. They have surged over 700%, so they've had a phenomenal year. They're due to join the S&P 500 officially on Monday. So this is their last day outside of the S&P 500 before they join. So we're expecting to see a flurry of activity when the stock market opens and as we go forward into the weekend. Thanks very much for joining me, and as I said, please don't forget to subscribe for more videos, and any questions, pop them in the box below. Thanks, and have a great weekend.